Good morning and welcome to the B.F. Anderson Technical Report for September the 3rd. I put this slide up and I kept it very simple and to the point for a specific reason. Fed announces major policy shift. Now this is important. The oldest saying on Wall Street is don't ever fight the Fed. Basically what's happening here is the Fed has realized that inflation is not an issue. They're going to have to really move more aggressively towards employment. So that means stimulative, and that's a very important point, and with the stock market, it means much. Don't underestimate fighting the Fed. Don't fight the Fed. Now, if you look at interest rates, what have happened here, now I go back to 2001 here, and you can see just a dramatic decline in interest rates. In our lifetime, we've never seen this. So the point is that basically there's free money out there, and it's going to cause people to move their money from CDs, etc., to the stock market. It's just the way it's going to be. So let's look at the charts. Nasdaq continues in a very positive uptrend, making new highs. Bull market. Here we have the weekly graph where we've got the 35-week moving average, which is basically in an uptrend. Also, you see the Nasdaq continuing to make new highs. S&P 500, now we're looking at a monthly chart here. We're on a golden cross. Everything looks very positive. New highs. Nasdaq, again, looking at it on a monthly basis. You should look at monthly charts. Most people look at weekly and daily charts. You should look at monthly charts. Point being, golden cross, new highs. Here we have China. Now, we don't want to underestimate China. We know there are issues there. We know there's problems. However, if you look around the world, there's not a whole lot going on. Europe's pretty dead. Latin America, really okay, not great. Few opportunities, not many. But in the 40-plus years that I've been in this business, I have really never seen any other international markets as positive as the Chinese market. So you should just keep an eye on it. We do have one Chinese position in our portfolio. However, looks good. All right, here we have the aggression index, and this is on a daily basis. You can see we're well above the 50-day moving average, a little bit extended here, a little bit of white space. However, higher high, higher high, higher low, very positive trend. Here we have one of the indicators. Now I have to jump back here. This is the daily. Here we have the Chinese. Excuse me for this for one moment, catch my breath. I failed to put the weekly on. I'll put it next week. But anyway, here we go. Interest rates continue flat to down. Interest rates may stay low for a very long period of time. Here we have oil. Now, if interest rates are low and the Fed is saying they're not worried about inflation, that means that they're kind of worried about deflation. Well, things like oil don't do well during deflationary times. So you can just see here, since really about 2014, for the last 6 years, oil has not been the place to be, and it continues to be dead. Now, here we have the financials, which is the bank stocks continuing just to move sideways. Okay, here we have the put-call ratio. You can see we're really getting aggressive here. A lot of positive, extreme greed. This usually sets up a correction. We'll just have to see. Here we are looking at volatility with the VIX index, continues to stay below 30. So we got low volatility, uptrending market, lots of greed, just a fact of life, human behavior. Here we have the S&P 500 daily graph where I've got the 25-day and the 50-day moving average continues to look very positive, new high. Here we have the 200-day moving average. S&P 500 well above it after really a double test. You can just see how it broke off that second test and took off. Now, just remember that Ned Johnson, who was the founder of Fidelity, was asked one time if he had one indicator, if he was on a desert island, he only had one indicator, what would it be? He says the 200-day moving average, which continues to stay positive for the S&P. Now, on new lows, no problem. We're not seeing many, not above 40. Very much under control, new highs. Now here's the encouraging news. Back in early August, we really started to see quite a few new highs, trended off, kind of went dead for a while. Now we're starting to see a resurgence. Like I say, this is a bull market. The bull market will last longer than most people realize. It's just a fact of life. Okay, here I've just taken a random sample of different ideas just to be kind of looking at different things. Here we have the Vanguard Growth Fund. It's an ETF. I'm doing it as a ratio to the S&P 500. So you can see the growth stocks are really breaking out here. Very strong area. All right, here I have the QQQs, which is the top 100 Nasdaq stocks compared to Treasury bonds, a 20-year Treasury bond. Breaking out, very strong uptrend. You don't want to be in bonds, you want to be in growth stocks. Here we have the large cap, the Schwab large cap growth fund compared to Treasury bonds. Again, you see the same basic pattern, same strong uptrend. The economy, the market is discounting better things ahead is what's going on here. Now, I went ahead and did the S&P 500 spiders index, ETF, compared to 20-year Treasury bonds as well, and you can see the positive uptrend. Now let's get into the top 5. We do own Tesla. We have owned Tesla off and on since around 2012. It just split 5 for 1. And so if you really think about it, we found this stock in 2012. I actually bought the car in 2012 just as a way to see. I didn't know if it was a golf cart. I didn't know if the air conditioning worked properly. But I went in and bought the car in 2012. The stock was at $5 a share, split adjusted. It's now at $447. This has been an incredible growth story. Very strong uptrend. Held the 10-day moving average today. Now, there's been some announcements here recently that, some people would find concerning. One is that they're doing a $5 billion stock offering, an equity dilution. But realize this is now a $400 billion company. $5 billion is roughly 1%, so it's not a lot of dilution. Wouldn't worry too much about it, but keep an eye. It may be topping here. We don't know, but it continues to stand an uptrend. Here's NVIDIA, which is a very strong company that's involved in semiconductor chips. They're probably the premier semiconductor chip company in the world. I mean, everything I read about them or know about them is incredibly positive. You can see it's just following that 10-day moving average, breaking out to all-time new highs on exceptionally high volume. This is a very positive looking pattern. Here's Plug Power, somewhat of a controversial company involved in fuel cells. And I don't know. It's a tough call. Here we have a company called Peloton. Now, this is really where you have to leave your opinions at the door. This is exercise machines. I mean, it's like the old treadmills. But according to Matt Spencer, who I work with, he's telling me he bought one and he really likes it, and it's a very positive experience. Here's Tupperware. Here's a new name. Look at the way this thing is broken out. I don't know. What's the speculation here? Okay, we have a basing period, a breakout, and then another breakout. Maybe people are staying at home more and eating leftovers. Who knows? But it's an interesting looking pattern. So that's it. If you have any questions, let me know. Thank you very much.